Hi, it's Michael here in Phoenix, Arizona. It's May 2011. I have something I want to bring to your attention. I call this the zero coupon rental because this is geared for someone who's maybe 30, 40 years old. They're getting into their high income years. They really don't need the income our properties generate for them, but they're looking for somewhere down line where they might want to retire. So this property here that we've just acquired for one of our other investors, this property is $81,000. Now that's down from about $250, $260 in 2006. So here's some of the properties. I mean, this is what this looks like. We just bought this for $81,000. It was a short sale. Took the bank about 6 weeks to approve it, but they have approved this at $81,000. Now, here's the nice thing about that. This property was built in 2002. It's appraised at that time for about $258,000. We just bought it for $81,000. It's going to cost you total with your down payment. You got some closing costs to pay for closing, title, your loan docs, and then these are distressed properties. So we always put some kind of cost in to do painting, cleaning, a little landscape touch-up work. We figure about $2,500. So your cash investment is $21,500. Now this property in Phoenix today, now we're talking May 2011. It's going to rent for probably a minimum of $900. It might rent for $925. It might rent for $950. We figured it at $900. Now, by the time you put your principal, interest, taxes, insurance, all these properties are in homeowner associations. So there's a homeowner association fee. There's also, you have to figure, we put a vacancy of 5% in there because we figure it's going to take us a little bit of time. It doesn't take us very long. It could take us 2 or 3 weeks to get this leased. And also, you have to remember that you've got garbage disposals that break and dishwashers that break. It needs to be painted, so we put a repair escrow in there. All that's figured in there at $683. And at $900, you're going to be cash flowing about $217 each and every month above and beyond your costs, and that's a total cost. Now, that's $2,600 a year. Now, on a zero coupon rental, if you don't need that cash flow, we figure that the first year you should really take that $2,600 and make it for yourself and just put a little bit of a cash cushion for yourself. But if you took that $217 and just put it into the principal and just did a principal reduction and never did anything else, that property is going to be free and clear in 13 3/4 years. So within less than 14 years, that house is free and clear and now becomes a cash flow. Becomes a cash cow to you, just cash flowing $900. But now these properties change and we expect to raise rents. So if we raise rents, say 3%, 5%, 7%, and you take that and turn that back into the principal reduction, you can have these properties paid off in 9 years, 10 years, 11 years. It becomes a zero coupon so that by the time, if you're 35 years old today, it's free and clear by the time you're 45 years old, 46. If you get 4 or 5 or 6 of these, you've got yourself a nice little portfolio by the time you retire, and by the time if you do these one a year, I don't know if this is something we can do. So within 15 or 20 years, you have yourself 10 of these properties free and clear, and each one of these properties is going to generate about $8,000 to $10,000 a year income. 10 of them gives you $100,000. So now what I'd like you to do, this is a cash-on-cash rate of return of 12%. A passive owner is 7.5%. Now, we find maybe 2, maybe 3 of these properties each and every month. If you're interested in it, if you think this is something that might work in your portfolio, call me here at Realty Executives. You can Google me. You can find me on the internet. Call me or Google me. I'm Michael DeVille at Realty Executives. Google me at michael@michaeldeville.com. Give me a call. Thank you.